Now let's have a look at an example for borrowing a loan. Now here we have a business and the bank. Now a business may choose to borrow money from a bank, and then over a certain period of time, it can be 1 year, it can be 5 years, or it can be 10 years, then the business must repay the loan it borrowed for the bank. Then the business must repay the loan it borrowed from the bank. But also the business does not just pay back the money, the business also pays back the interest on that loan. Please also note that this transaction is different from when the business takes money out of its current account. In this case, the money is coming from a banking institution. Now let's have a look at a transaction. On the 3rd, received 25,000 Namibian dollars by EFT from Kudu Bank as a loan at an interest rate of 8% PA, which stands for per annum, which means per year. Now the two accounts we can identify, one is bank because of the EFT, the other account is the loan from Kudu Bank. Now this transaction will involve our cash book, and again this transaction will involve our cash book and the money we will enter in the bank column because we received the money through EFT. Now the business had a balance of 50,000 Namibian dollars in the bank. Then it acquired a loan from Kudu Bank worth 25,000 Namibian dollars. So after receiving the money, the bank balance increased to 75,000 Namibian dollars. Now previously the business did not have a loan from Kudu Bank, so the balance was 0. But after acquiring the loan that was paid through EFT, the balance for that loan from Kudu Bank now is 25,000 Namibian dollars. So at the end of the day, the bank increased and the loan increased. Now let's go and classify those two accounts. Firstly, we have our bank, which is an asset, and our asset increased, so we would enter that on the debit side. Our other account is our loan account, and our loan account also increased, and therefore our loan is a liability and our liabilities increase on the credit side. Now let's go and complete that transaction. Firstly, we would need to enter our loan account, but please remember we should enter not only loan but where we got the loan from, and we got the loan from Kudu Bank, so it's loan Kudu Bank. Then we would debit our cash book with 25,000 Namibian dollars, and we would enter the amount in the bank column. And when we debit our cash book, we are receiving money because Kudu Bank transferred the money into the business's bank account. And then we would credit our loan account with 25,000 Namibian dollars, and the description is bank. And remember, we should enter the name of the bank after the loan, because we might also have loans at other banks, so each loan account for a different bank should have their own D account. And that completes our double entry process. Let's move on to the next transaction.